Uber is a large player in the personal mobility space. They are also expected to be a key player in autonomous driving for the future. At least they have an infrastructural advantage there. In today's video, we want to evaluate whether or not buying Uber at today's price could make sense. For that, we will look at two different cases. But first, the raw numbers. Last year, they made a revenue of roughly $44 billion with a net income of $9.8 billion, which gives them a very good profit margin of around 22%. And they're currently selling for a price of $82, which gives them a P of 17, at least based on last year's numbers. Their trailing 12 months net income is already way higher, so keep that in mind. For our first case, we're going to look at a bear case for the next 5 years. Their revenue growth has been very considerable in the last couple of years, but now as they're getting larger, more mature, and also competition rises in that field, those revenue growth numbers could of course shrink down. And I think 9% is still very good for a bear case considering. But I think the biggest hit would be to a profit margin in a bear case, considering that the personal mobility space sinks further down in margin, and something like autonomous driving, even if it comes, might not be as profitable, and so on. They are potentially buying back a couple of shares, but not too many in this case. I would still give them it's a bit difficult to find a PE for Uber, especially on such a low case. I think I'm going lower for 18. 16 is around the average for a company. And I think Uber is an above average company, but in such a low case, I don't think it's too justifiable to give them a much higher PE. So looking at the results, this would take the stock price to around $77. And if bought at today's price, that would be an annualized return of negative 1.19%. So not looking too good on this case. But in contrast, let's look at a bull case. Here, I would assume that the revenue growth keeps continuing in lower double-digit lands. Not as good as the last couple of years, but as they're becoming larger and larger, they can still capitalize on further customer engagement and maybe even get first autonomous driving going, even though that's probably a bit unrealistic in 5 years, at least to get it profitable. But in this case, I think it is important to keep their profit margin a bit higher, that they can still be a dominant player in this field, that they can keep their mode status for personal mobility, and when they generate more cash in this field, that they can also afford to buy back a couple of more shares. And I think for a 13% revenue growth, that is almost 80% increase in the next 5 years of their revenue, I think I'm going with a PE of 25. This would take the stock price to $226, which would be an annualized return of 22% if bought at today's price. But now let's average these two cases out. This would take the stock price to $150 with an annualized return of 13%. So roughly around where I personally would put my margin of safety. So the company is certainly looking interesting to buy. I already hold a position in Uber. I've been buying as the stock went down a bit over the last couple of months. And I'm definitely on the lookout to maybe acquire a couple of more shares as the stock drops. However, I'm still a bit cautious because it's a bit unclear on how the company, and especially autonomous driving, will develop. So I won't put too much stakes in it, and I'm certainly probably want an even higher margin of safety to accumulate that risk. But let me know what you guys think down in the comments, and I will see you in the next one.